If you've been following the real estate market for the last year, there's a good chance you feel conflicted. You hear one thing in the headlines, you hear something completely different from your friends, and what you're seeing on the street doesn't match either. Some people feel like the market's dead, others feel like prices never came down, and many buyers and sellers are frozen, unsure what to do next. So today I want to slow this right down. No hype, no fear, no Vancouver headlines, just the actual data from the Central Okanagan and what it really means. Because once you understand where the activity came from, who is buying, and what certain segments behaved the way they did, the market suddenly makes sense. This is the Vantage Report. My name is Hazzi, and I make these videos to be your eyes and ears on the real estate market to help you make great decisions on your property. Let's start with the high-level numbers, because this is where most conversations end and where most misunderstandings begin. In 2025, we had over 4,100 total sales in the Central Okanagan. Now in 2024, it was just shy of 3,900. So yes, activity increased roughly 7%. Now gross sales volume moved from 3.1 billion to north of 3.5. So again, more money moved through the system. But when you look at pricing, the story changes. The average sale price only went from 740 to 749. Not exactly a big surge, it's basically flat. Days on market actually increased slightly from 44 days to 48, and sellers discounting is roughly 3% off list price, just like last year. So this wasn't a hot market, but it wasn't a broken market either. It was a selective market, and that distinction matters more than most people realize. Now, this is where things get interesting and where most people get the story wrong. When people hear sales were up, they assume the market improved evenly, that condos recovered, first-time buyers came back in, and investors returned to the market. But when you break down the data by property type, the picture is very clear. All of the new net activity in 2025 came from single-family homes. You see the sales went from 1,700 to north of 2,000 in 2025. That's real movement. Now, if you look at the rest of the market, condo sales actually dipped slightly, down to 1049 from 1067. Townhouses were essentially flat. So the market didn't rise evenly. It tilted, and it tilted toward buyers who already had capacity. So this wasn't a market driven by affordability improving necessarily. It wasn't first-time buyers rushing back in, and it definitely wasn't speculative money. What happened in 2025 is that buyers who could did, and instead of buying the compromised property, they skipped ahead and bought a single-family home. Now that tells us something important. The market isn't being driven by emotion, it's being driven by balance sheets. And what I mean by that is people who already have equity. And once you see that, a lot of the confusion disappears. Layering price on top of that, the pattern becomes almost undeniable. Sales over $1 million increased by 20% year over year. At $2 million, the jump was 56%. At $3 million, the jump is 71%. At $5 million, 86%. And even $10 million sales were up 200%. That means the higher you go up in price, the more the market improved. That's not optimism about the market, that's conviction. And this is what a bifurcated market looks like. The middle and the bottom end hesitates while the top moves. You see, capital didn't leave the market, it moved up. And that's why single-family homes led the year. Not because they were cheap, but because they were the best expression of certainty. Now let's talk about inventory for a second, because this is where psychology kicks in. Throughout 2025, we carried inventory all year long. We started and ended the year with about 2,400 listings and peaked in the spring at about 3,600. Now, if you compare that to 2021, when we had about 1,200 listings, that means we have 3 times the selection. But here's the nuance most people miss. Inventory isn't the whole story. That's just the supply side. The demand side is exactly 1/2 of what it was when things were busy. That means a buyer today has 1/6 of the pressure they had back in 2021. So naturally, buyers feel empowered, but also selective, maybe even picky. And sellers can be frustrated because although they believe their home is priced well, they may still be clinging to 2021 and 2022 pricing, which is why the market has felt underwhelming, because there's not enough sellers truly willing to meet the buyers where they are. All right, now I want to talk to the folks that have bought homes in the last few years. I want to acknowledge something that a lot of real estate agents won't say out loud, and that is that, frankly, the last few years haven't felt like great wealth building years, and that's fair. But that doesn't mean that real estate has failed, because if you zoom out only 5 years, you'll see that the average single-family home actually has gone from in the low 800s to over $1 million. $100,000 down payment 10 years ago has turned into over $750,000 in equity. That's not luck, that's time, and time is still doing its job. And $750,000 is life-changing equity. A lot of people focus their attention on the very small group of people who might be underwater on their property. These would be the folks that maybe bought in March of 2022. If you could pinpoint the worst time to buy a home, it would be that month. But it's really only the folks that bought between, say, February and May of that year that would potentially be underwater. And that's less than 1,000 people out of the entire population of Kelowna. The real headline and the real cohort of people we should be focusing on that will drive the market in 2026 are the roughly 18,000 households who are coming to the end of the cycle that they hold their real estate for. As people move every 5 to 7 years, you will have a whole cohort of people who are deep into the money when it comes to the value of their home. They bought homes between 2018 and 2020, and they are sitting on hundreds of thousands of dollars of new equity. And the other thing these folks are the perfect demographic for the local economy. And what I mean by that is that people ages 40 to 45, and if you could pinpoint it, it's that 43-year-old person, just like yours truly, who is at their peak earning years, but also their peak consumption years. And what that means is they need the biggest house they will ever need right now. And these are folks that bought their first house at the average age of a first-time buyer, age 35, 7 years ago. And so if you could imagine, these folks now are entering their peak consumption years, meaning they need the biggest house to please their family, and they've got their weight of the world on their shoulders, and they are ready to go and ready to upgrade their home, and they couldn't have timed it any better. They have 3 times the selection, and the executive homes that they want are now on sale. So this is going to be the big headline this year, which is the elder millennials, like myself, upgrading their homes and getting a great deal, having a ton of selection in the process. Now, looking ahead to 2026, the consensus is actually pretty boring, and that's a good thing. That means no boom, but no bust. Stable interest rates, likely elevated inventory for most of the years, and very selective buyers. Remember, sales wake up first, prices follow later. So 2026 isn't about timing the bottom, it's about positioning yourself correctly. So here's the bottom line. The Central Okanagan isn't weak. We still have extremely good fundamentals, and we are entering into our recovery phase. I've said this in previous videos, the best possible deals are likely in the rearview mirror. The rates will be stable this year. It is a perfect time to enter the market, whether you're a first-time buyer or you're that millennial looking to move up and make a great trade. This is your year. The market is not going to go parabolic. We will not see big jumps in price, probably single-digit increase in real estate values this year, and it won't be evenly distributed. Again, it will be concentrated around single family homes, with I think the biggest uptick happening in that executive section, that 1.3 to 1.7 range is I think where you're going to see the best growth this year, because it's also been the one that's been held down the most over the last 3 to 4 years. And so there you have it, folks. That is my prognosis for 2026. I think it's going to be a relatively normal, stable, grounded year with some great opportunity if you know where to look. So thanks so much for watching. If you're interested to know what your home would sell for in today's market, you can start that process right here on the blog or in the comment section below if you're watching on YouTube. And if you're interested in poking around to see what properties might be available if you are thinking about making a move, you can start that process right here as well, either on this blog or in the comment section below. Thanks again for watching, and we'll see you in 3 months.